This is a critical warning to every single investor out there, and what you're going to hear in today's video may end up saving you a lot of trouble. Please listen carefully. Don't click nothing, don't smash nothing, don't buy nothing, just listen. All I need is your attention. And basically what's been going on for the past few days, the market threw a little bit of a hissy fit. We saw stocks like Palantir, Nvidia, and a lot of the market basically go down, all of a sudden drop off a cliff, then recover, and a lot of people are confused. I'm getting DMs on X, I'm getting questions in our private community, I'm getting voicemails and texts from relatives I haven't seen since middle school. Everybody's trying to figure out what's going on with this market. And in today's video, I'm going to tell you exactly what the story is before you do anything foolish. Just 10 days ago, Palantir was at $190 almost. 2 days ago, it was at $144 with a massive 24% drop in just a couple of days. And now it's back up to $160 almost. And a lot of people panic sold. A lot of people thought that this is the end, this is the beginning of the crash, and they sold out and now it bounced again. Maybe it drops again, maybe it bounces back up even higher, I don't know. The same thing happened with Nvidia. Nvidia was at 182, just a few days ago. It dropped to 169. That's a 7% drop. Now, you may think that a 7% drop is not a significant number, but for a $4.5 trillion company, a 7% drop in 2 days is a big deal. Now it's back up to 174. The same moral, the same story. Nothing really changes here. Now look, let's be honest. Even before what happened this week, you have been bombarded by mainstream media and a lot of influencers on social media explaining to you that we are on the brink of a massive market crash, of a massive correction. Something big is coming and a lot of people will get wiped out. Now, I'm not here to say if it happens or it doesn't, and I'm not here to talk about prophecies. That's not what I do. But what I do know is that even leading up for this week, we have gotten a lot of negativity, a lot of negative sentiment, a lot of nervous energy from mainstream media and social media. And there's a lot of reasons to be nervous, right? For example, we know that the average on the S&P 500 is about 10% per year. Over the past 3 years, we've been running a lot harder than that. 2023, we have done 25%. 2024, 22%. This year, we're in August, end of August, we're 9%. So how long can this continue? I mean, the market cannot go against its own average because the average is like a magnet, right? It pulls you back down, but it hasn't happened yet. On the other hand, people are saying, well, look, Tom, the forward PE on the S&P 500 is very high. The current PE is 29, which is historically dramatically a lot higher than the 17, 18, 19 average the S&P usually has. So we're talking about a market that's been running hot for almost 3 years. We're talking about very, very high price to earnings ratio on the S&P 500. We're talking about stocks like Palantir, who is up 1,500% of the past 3 years. Nvidia is up 1,200%. These are monopoly numbers. They're not numbers that you usually see in the stock market. These are huge outliers. And a lot of people are saying, well, look, you got to get out before it crashes. And I'm not here to predict. Again, I don't know. Maybe the market crashes tomorrow and everything goes down 80%. I don't know. But what I do know is history. What I do know is finance. And what I do know is numbers. And I'm a student of the game. Peter Lynch famously quoted that more money was lost waiting for a correction than from the corrections themselves. And he's right. We said this back in January 2024 as a society, as a finance community. We said that the market is getting overstretched. We said as a community the same thing in 2025, that the market is just too expensive. This can't go on forever. So in January 2025, and when I say we, I mean the entire finance community. I don't think I was ever part of that chatter, but it doesn't matter. The community in general basically was very, very nervous, very, very anxious. Oh my God, this can continue. This is too much, 2025. But if you waited on the sidelines, waiting for the crash, you have missed on 8.5% just from sitting in the index, in the S&P 500. You have missed on 400% on Palantir and a bunch of other companies, Nvidia, other companies. The markets can't stay irrational. Even when it seems like a crash is literally around the corner, the market can continue to be irrational for a lot longer than any of us can stay solvent. And playing these games with the market, trying to figure out when the crash is going to happen, is a very futile effort, which is exactly the reason why dead people beat the living every single year and the S&P 500 beats 90% of professional money managers. Look, I'll give you an example. Let's say you invested $10,000 into the S&P 500 20 years ago. Today, this money would have been $65,000, $70,000. While at the same time, let's say that you were jumping in and out for those 20 years. You didn't just hold on. You basically listened to every time they told you, this is it, this is the time to sell. Because, in the economy, in the S&P 500, there's always reasons to sell, right? So let's say you listened and you jumped in and out. And as a result, you have missed on the best 10 days of the past 20 years. Well, that is going to slash your return from $65,000 all the way down to $29,000. And the crazy part about it, we're talking about 10 days over the course of 20 years. The alternative cost of not being in the market is massive. It is outsized. It is foolish. It is dangerous not to be invested. And people are afraid that when the storm comes and it crashes, it's going to wipe them out. Well, here's the thing. The problem isn't the storm that's coming. The problem is people starting to panic and getting anxious and getting nervous, and they're selling at the bottom, which is exactly the opposite of what you should be doing if you, in fact, are holding good companies. Now, I'm looking at the market overall right now. I'm looking at good earnings growth in 2025. I'm looking at 80% of companies who beat earnings in Q2. Decent guidance for 2026. Credit markets are okay. There's good overall financial setups. And we have a lot of CapEx, capital expenditures, investments from hyperscalers because of AI, which leads to more grid, which leads to more solutions in infrastructure, which leads to more jobs in developing AI and LLMs. And the whole thing is basically a huge derivative for more and more jobs, which is going to fuel the economy. We don't really have an IPO euphoria like we usually have before the market pops. And also, no real peak sentiment. I can't really agree to the sentiment that people have that, oh my God, we can't lose, jump into the stock market. Sure, there's a lot more interest in the stock market over the past few years because of how good it has done. But we're not here in 2021 levels where basically people thought stocks can only go up forever. We really actually have a lot of nervous energy right now, not euphoria. And then ahead, we also have the rate cuts that are coming up, because eventually the Fed will have to cut rates in this environment. So we're talking better financial conditions, more lenient financial conditions into this market. But as I said before, it is very, very hard to predict what's going to happen. Despite everything I just pointed out to right now, the market might crash tomorrow, or in a week, or in a month, or in a year, or in 5 years. It literally can happen at any point, and there's nobody who can predict this. That is why I prepare. I don't predict. Because to me, whatever happens doesn't matter. And I'll explain. This is exactly the system we've been teaching to 25,000 members in the academy for years. I don't care what the market does. If I own quality, if I've made my job, which is select quality businesses, quality companies, and not go for FOMO and hype, and it's the future, bro. And I've selected solid businesses, and I spice it up with a little bit or a lot of S&P 500, I know what's going to happen. If the market takes a dump because of geopolitics, because of economics, because aliens land, I don't know, there's a million different things why the market is fluctuating the way it is. Even if we're looking at a massive crash, massive correction, it won't matter. Because here's the thing. When you have a massive storm, if you have a crappy boat, it's going to sink. But the good companies, they're going to be left standing. And then they're just going to have all the fish to themselves because all the crappy fishing boats have been sunk by the storm. I am a huge believer that when there is a correction, where this massive shake-off, the good companies that will be left standing will be making more money, which is exactly what happened in 2000, which is exactly what happened in 2021, 22, 23. Remember, all the garbage was washed out in 2022, and now we're looking at a huge spike. Again, I don't know how far this goes. Maybe this is 1996 and we have 3 more years. Maybe this is 1999. I don't know where we are. I'm not going to predict. I'm going to prepare. I'm going to have a plan. I'm going to make sure I have enough money. I'm going to make sure I've selected the right companies. And I'm going to make sure that if the market continues to go up, I'll slowly continue to invest by dollar cost averaging. Or if the market takes a little dump, well, I'm probably going to dip my toes a little bit more. And if the market goes even harder and drops significantly because I know I hold quality, I'm going to double down and use that, turn it into buy the dip moment and enjoy it for the 2-3 years that follows, which is exactly what happened in 2022. Look at the price of Nvidia in 2022, late 2022, October 2022. It was like 10 times lower. Palantir was $6. The profits of holding good companies in bad times and having conviction comes 2, 3, 4 years later, not at the moment. At the moment, it's pretty painful. But then again, this is the whole point. Picking good companies, building conviction. It's not easy to do it when you're surrounded by idiots in mainstream media who both screaming nonsense that are about to destroy your portfolio. Which is why in the Academy, we've spent the last 6 months getting into companies that are quality, companies that are riding the AI infrastructure wave, companies like CEG, Constellation Energy. We added it to my top stocks list in the Academy. Yes, we have that. In March 13th, it's up 45%. We done it with Cadence. Cadence, we added on June 26th, it's up 16%. We also added VRT, Vertiv. It's up 10% since we added it. We don't do stock picks, ladies and gentlemen, we don't. What we do in the Academy is build conviction and help you build your own conviction through research, through analysis, through developing skills. So you can do it yourself, because let me clue you in a little secret. Even if you find the best stock picker in the world, guy with a high percentage or a girl with a high percentage of being right, and you buy stocks because somebody with a camera told you it's a good idea to buy a stock, what's going to happen when it's down 70% and now you're fearful that you may lose everything you saved up for the past 10 years? It's not a pleasant feeling. The only way to be able to have conviction when the real storm comes, and it will come, the real way is to build conviction from inside, through your own skills, through your knowledge, by becoming a rock. Nothing will be able to move you. Not mainstream media, not idiots on social media, nothing. That is why I invite you to join our Academy, patreon.com/Tom Nash. We're shutting down the Academy for the rest of the month because we have too many signups. We're at 25,000 members already. I'm going to leave it open for 24 hours. Then, at least until the end of August, it's going to be shut down for new joins, and then we'll see. Thank you so much. I'll see you in the next one. Peace.